Welcome to the FinTech in Africa session. We are going to go ahead and get started. So I'm going to turn it over to Elias, our moderator.
Hi, so glad to be here with you. My name is Elias Bruegmann. I lead the Banking and Financial Products Data Science team at Stripe, and I'm thrilled to be able to introduce Tavneet. Tavneet is the Lewis E. Seley Professor of Applied Economics and an Associate Professor of Applied Economics at the MIT Sloan School of Management. Her expertise is in the role of technology in sub-Saharan Africa. I was asking a little bit when we talked earlier today about how she got into studying mobile money and fintech in Africa. And she shared that her first study in the area was in 2008, I believe, which was very soon after the introduction of mobile money in 2007 in Kenya. And that she really doesn't recall exactly how she found out about it, but it was very early. No one sort of knew that this was happening. It wasn't clear that it was going to be a big thing, but she was on the ground in Kenya. She was doing research there, and she talked to people who had actually used this and saw the potential, wanted to study it. And so, you know, I think that that's a great reminder to us all that the most important thing about research is often keeping our ears open and looking for the next big thing and where to go with it. I also asked for a funny anecdote, and she shared that when they were setting up that initial survey, they did a whole bunch of work over multiple months to try and make sure that they'd have enough users of this of mobile money in their sample. You know, we're very concerned about getting it to 10% of the sample so they could really do something with that data. And they found out, though, that the M-PESA was adding 10,000 new users per day during that time period. And so by the time that the survey actually launched, they ended up with about 35% penetration. And so, you know, that's, I think, a good sign that you're on to something important. So with that, I'll turn it over to Tavneet for her presentation.
Thanks, Elias, for the kind introduction. It's lovely to be here this afternoon, or I guess this morning-ish for some people, or noon. I'm gonna go ahead and share screen so I can, oops. All right, I hope you can see slides. Elias, they're okay? Yeah? Okay, awesome, thank you. All right, so welcome everyone. It's really lovely to be here. I'm going to talk a bit about kind of work I've been doing on fintech in Africa over the last longer than a decade. I won't count the numbers because then I'll just feel old. And Elias already told you how I got interested in this. So let me just launch right in. So, you know, I think it's safe to say that most of us kind of have been watching mobile phones changing finance in the developing world quite completely. There's mobile money now in 96 countries with 310 separate deployments. There's more than 1 billion accounts worldwide, more than $2 billion worth of transactions per day worldwide, and more than 5 million unique agent outlets. So we started off, as Elias said, early in the game, trying to think, what could this do in a developing country? What's the value of this for people using it, not for, of course, the firms? So trying to understand what the impacts are. And so I'll give you a quick sort of rundown of the research we did on M-PESA in Kenya, which is the mobile money system there. It's probably maybe the most successful example of this in the developing world. And has been copied in a lot of the future deployments that came afterwards. So M-PESA is basically a way to sort of both store money on your phone, but also to be able to send it and receive it from people, send to people, receive from people. It works on a dumb phone, not a smartphone. So it's not an app, but it's sort of like an app on your SIM card. And it comes with this little menu that you can see. And I use kind of this massive agent network, and I'll show you a bit more about them in a second, to cash in and cash out. So if I want to put money in the system, I have to go to the agents, I hand them cash and it's in my phone as cash. And then if I want to withdraw, I'm going to use this agent network. So think of them as the kind of equivalent of an ATM in the grand sense of a financial system. I will say this sits outside the formal banking system. So it runs independent mostly of the formal banking system. So you don't need a bank account or a credit card on the back end. It just goes cash to virtual money and back out to cash, okay? And most people aren't using banks really that much, especially when this launched. So that's kind of how it works. It's really simple. You just use the menu to kind of both deposit, withdraw, send, and receive money. And it kind of took off like wildfire in Kenya. So it launched in March 2007. Here I've got kind of the first 4 years and then the next 4 years. And I just wanted to give some granularity on what's happening over these 8 years. On the left axis, I have the number of customers. So think of this as take up or penetration. And then on the right, I have the number of agents, those agents I showed you, how many of those are there? And remember at this time, so when M-PESA launched in 2007, just to give you some context, there was about 1,000 ATMs in the whole country. You know, within 4 years, there's about 30,000 agents in the country. They're already 30 times the infrastructure of the banking system, 30 times the accessibility. By 2015, they're at 130,000. Now they're at 180,000. So it's still 180 times the size of the banking infrastructure, if you think of just pure infrastructure terms. You know, there's now about 30 million users, which means basically almost everyone in the country has an account. Okay, so it's been kind of the roaring success story of mobile money. And then, as I said, a lot of other countries and telcos have sort of copied the model to create mobile money deployments elsewhere. Let me talk about kind of what we did research-wise and what we found, and of course, happy to take more questions as they come. One of the things we got interested in is this concept of financial resilience. It's core to financial well-being, and it's a measure of financial well-being. Even the CFPB uses this. And it's basically, if something bad happens in your life, are you able to deal with it? Are you able to be resilient to it? And the way most people have resilience is either private insurance, I buy insurance, right? In the US, I buy health insurance or I buy flood insurance. The second is sort of public sector safety nets. The government has programs that kick in when bad things happen. So, you know, in a lot of the US, not everywhere, of course, there is a certain amount of financial resilience that comes from these mechanisms. I buy myself insurance in some way, or I have the public sector. You know, in developing countries, especially in Africa, both of these are missing for poor people. Very few people can afford private insurance, and there's very little public sector safety net. So instead, what do people do? And there's been lots of literature for 30 years on this. We kind of create social ties. I'm going to use Elias as my social network today. Sorry, Elias, you're the only person in front of me, so you pay the costs. And what do? We make a deal. I say to Elias, okay, if something bad happens to you, I'm going to help you. But if something bad happens to me, you help me. Okay, so it's kind of like this tit for tat. And are these efficient or not? Well, they kind of depend on how far Elias is. You know, if something bad happens, I actually have to get money to him, right? So there's a transaction cost in building this network, right? When something bad happens to him and he calls me, I need help, I actually have to get money to him. And so these networks existed before M-PESA. These systems existed as social insurance, because you can imagine the set of bad events in poor countries is quite large, right? And so these sorts of systems kind of stepped in for the lack of insurance. So what do we see? What happens in Kenya when M-PESA comes around is, though these systems existed, all of this money transfer that was going around to help people dumped onto the mobile phones immediately. Okay, so this is what it looked like before. Elias would tell me, oh, my kid is sick, Tavneet, I really need help. And I'd be like, okay, I'm getting money. I'd give it to a random bus driver who's going towards where Elias lives, and he would finally get it. This system has many costs, many risks. The bus driver could just steal it and tell me, oh my God, I got robbed, Tavneet. And I'd be like, oh, okay, it's gonna cost money. I'll give you costs in a second. But this system existed. And when mobile money comes around, the system just core dumps entirely onto mobile phones. Okay, and the reason it's on mobile phones is it's gonna be cheaper. I'll show you that in a second. It's quick. The minute I send money to Elias, he gets it within 1 second. It's very, very safe. Nobody can steal it in between that transfer. It can't disappear. It can't go anywhere. And so you get these big efficiency gains in these social insurance networks that come from using something that's quicker, cheaper, safer, more efficient, right? And I'll show you those results in a second. Okay, so just to give you a sense of transaction costs, before this, what would I do? People would say, oh, you can go to the bank and wire it. A third of households in Kenya live more than 10 kilometers from a bank branch. They don't have cars. No one's walking 10 kilometers to a bank branch to send Elias $3 or $4, right? Most people would do it on the bus system. The average distance of a transfer in our first round of data is about 200 kilometers. That's almost a $5 bus ride if I went myself. If I gave it to the bus driver, I would usually pay about $1, $1.50, okay? The transaction cost on the mobile phone is 35 cents. So it dramatically drops that transaction cost. The other piece of the transaction cost is I have to get to the bus driver. I have to get to the bus stop. I have to get to the bank. That piece is actually quite large, right? Mobile money agents are all over. The average distance to a mobile money agent right now in Kenya is less than half a kilometer. That's like a 10-minute walk. I can do a 10-minute walk pretty easily, right? So not only did it reduce the monetary costs, it also reduced dramatically these access costs, because there's an agent who you can go deposit money in your account at within a 10 minutes walk of almost everyone. Okay, and that's kind of one of the other big transaction cost pieces. Okay, let me show you what it did. I'm going to just plot these out. So we started, the way we think of resilience is we measure kind of what you spend money on, your total expenditure. We call it consumption. Okay, and we try to get a sense, okay, if something bad happens, do you have to reduce what you spend on because you're not insured? Okay, so we kind of look at the M-PESA users and the non-users, and we say, okay, when something bad happens, when you have a negative shock, do they have to reduce consumption or not? Okay, and we see that the non-users reduced their consumption by about 7%. That means they're not fully insured. If they were fully insured, it would be no effect on consumption, okay? And the users actually are able to increase their expenditures. Okay, I'll tell you why that is in a second. This is mostly why it is. What are the shocks that most people face? It's gonna be health events. Someone in your house, your kid or a family member got sick, okay? So this is what happens when a family member gets sick. We look at what's the total expenditure when a family member gets sick. And you see for the non-users, it goes down a tiny bit, but not that much. For the users, it goes up a lot by 12%, okay? So we thought, oh, it's because they're spending on medicine, right? So we look at expenditure on medical care. Actually, expenditure on medical care goes up for everybody. Okay, so we went, oh, interesting. Okay, so the users and the non-users are both spending on medical care. So what happens with the non-users is they don't have as good access to this network over mobile money. So when someone gets sick, what do? They're going to cut expenditure out of other budget categories. So they reduce non-food and food expenditure. You can see that in the last two pieces of that slide. So they're going to reallocate from other items towards health. So health is super important. Everybody invests in it, poor or rich. You're going to go find some medication for your kid when they're sick, okay? But for the non-users, they're going to take it out of other pieces of their budget. For the users, we see the non-food goes up and the food goes up. The food is, remember, if you get medication from your doctor, they usually say take with food. There's a reason. That's the reason. They go get more food when people are sick. And the non-food is actually clothing, blankets, things like that, things that are complementary to health. Okay, so not only are they spending on medical, they don't have to cut things, they can increase those things that they need. And the reason is we see that they reach out to their network more over the mobile phone, they get more remittances from their network, they get from more people, more amount, and this is what helps them spend more. Okay, so this is the improvement in resilience I was talking about. When bad events happen, not only can you kind of manage them, you actually can kind of completely function through this health event and do the compensating expenditure as well, okay? Let me tell you about the longer term effects. So we went back 4 or 5 years after all this to look at, okay, what happens in the long term, right? As you make these decisions, and we see that there's a reduction of poverty of about 2 percentage points. So about 196,000 households in Kenya moved out of poverty as a result of M-PESA. And a bunch of women switched occupation from agriculture to being in a business. Okay, and this is kind of the, remember, if you have insurance, what are you going to do? You're going to take on more high risk things because you know if it goes wrong, I have a better network to protect me. right? The more insurance I have, the more risk I'm willing to take. And that second piece is, I think, women deciding, oh, I can take risk because now I have independent access to my network. Okay, so this is the mobile money story, and these results have been replicated in a couple of other countries. Let me tell you kind of what's been happening since all that. This has been followed by maybe one successful product in the space, which is called a digital bank account. And so there's been some banks and some lenders that have realized that once there's everybody who has this digital account on their phones, you can possibly provide other services over these phones, right? And one of the most common one has been thinking about how to provide loans in banking. So we've been doing some work on one of the digital banks in Kenya, and I'll talk about that very briefly. So it's a fully, we study, there's a couple of these. We're going to study the most popular one called M-SHWARI in Kenya. Almost 75% of adults have this digital bank account, and about 20% of adults have an active loan on it. It's a fully digital bank. The parent bank that started this product didn't have a lot of retail banking, and this was a way to get consumer retail banking. Okay, there's no bank branches really. There's no tellers, no nothing. Take away all the infrastructure of banking. It's fully digital. You open it on your mobile phone, and then they have free transactions between the wallet that is this digital bank account and mobile money. So you use the mobile money rails to operate it. If you want to put money in your account, you go put it in your mobile money account and then move it across to the bank account. If you want to withdraw, you do the reverse. So basically, I'm using the mobile money as kind of rails or the infrastructure to do cash in, cash out of a bank account. And then they provide you savings and interest on savings and credit. There's no loan officers. They have data on your mobile money transactions, and they use that to create a credit score. There's very little human beings on the back end of this. It's supposed to be fully digital. Okay, and it's supposed to lower costs both for the bank and for the customers. Okay, so we study that credit piece and try to understand what's the value of the credit piece, because they're broadening credit access, right? Very few people had loans in the banking system. In our sample for this study, it's somewhere on the order of 3 or 4%. They're gonna have up to 20, 25% of people added to the loan system. Okay, which is quite a large increase. And so we kind of tried to study the impacts of this credit piece on M-SHWARI and said, okay, what impacts does this have? And again, we just find a resilience effect. This is a short-term loan. It's a 30-day loan. And basically people are taking it out when something bad happens. So we just look at when something bad happens, do you have to cut expenses in different things in any categories? The first set of results is any, there's meals, medical, non-food, and then other coping strategies when something bad happens. So we basically see you're less likely to have to cut expenses to deal with this event, okay? We also see you're less likely to have to cut medical, okay? This kind of fits what we said earlier. A lot of these resilience events are about medical and have some role in medical, okay? And they're going to help people smooth these risks. And it sits very nicely with the mobile money results we found earlier, where the resilience piece is key to starting off those long-term effects. This is a brand new study, so we don't have long-term effects. We're going to have to wait many years to see those, and maybe they won't show up, who knows? But for now, these are kind of the short-term effects that it's just going to provide resilience. It also tells you that, maybe credit is not as important as insurance in some grand sense, right? When risk is such an important part of your life, everything you use seems to be to deal with risk rather than to make investments, right? Even here, the loans are not to invest in your business. They're to deal with the risks of everyday life, okay? And that's kind of maybe a surprising thing to kind of, imagine or process for these issues. Okay, so the summary from M-SHWARI was we had huge take up. In fact, in our sample larger than the 25%, we had 34% take up. It's much higher than any other form of financial access for poor people, just way higher. And then we also see it doesn't substitute for other forms of credit, right? People were using informal credit. I borrow from family, I borrow from friends. This doesn't substitute that. So it actually grows the amount of credit you have. It's a true expansion. And then we see improved resilience. And then the other piece we saw is actually a higher propensity to spend on education. Just to tie the knot back to the mobile money results, remember in mobile money, we saw you get better resilience to health events, right? And you're less likely to cut, remember, non-food. Part of that non-food was actually education. So basically what happens here is when someone gets sick, it's going to be health events again. You take out the loan to spend on it. What would the people who don't have the loan do? They're going to cut education to spend on it. Okay. And so we're seeing kind of actually the marginal benefit of the loan is a little bit in not having to cut medical expenses, but also in the ability to keep up expenses on education. And then we see no overall effects on overall consumption, poverty, wealth, employment. I will say it's short term because this is only 1 or 2 years old. You know, with M-PESA, we've tracked it for, I don't know, 10 years. So who knows what the long term looks like. Okay, so maybe I will say we should take stock there. And Elias, maybe this is where you want to jump in, and instead of me concluding, we can maybe take stock together of what we think the world looks like.
Great. Thank you so much for the presentation. I was going to maybe ask a few questions, have a little back and forth, and then we'll get to audience questions in a bit. When we were talking earlier today, you had some really interesting things to say about sort of the future of mobile money. And, you know, I wanted to maybe dig into that a bit now that we've got the audience of, you know, how are things going in terms of innovation on top of mobile money? You know, obviously M-SHWARI is a direction there. Are there others? And how do you see the future evolving?
Yeah, thanks, Elias. You know, let me start by saying mobile money has done great things in some of these countries, especially at the bottom end of the income spectrum, right? This ability to deal with risk and therefore make investments is very important, and I don't want to underplay that. And like I said, it's been replicated in 4 other countries. It's showing the same sort of effects. I will say the other side of the coin for me is actually rather disappointing. We have had, at least in Kenya, almost universal adoption at the household level of a digital account since 2014. It's been 7 years. There's one product anybody can talk about that's scaled, which is M-SHWARI. It's not the greatest product in the world. It's a loan that has a month repayment. And, you know, it's the only product around, right? There's no difference in terms. There's no difference in rates. There's nothing. There's no variance, right? There's no kind of developed financial system where I go into a bank or an organization, they go, there's one product, do you want it? Do you not want it, right? There's a slew of products to target different people's needs and different people's demands, right? So for me, the innovation piece is actually the minus of the success story that I talked about, right? Huge success there, huge non-success of innovation, right? They are competitors to M-SHWARI, their product looks exactly the same. You know, there's very little kind of creation of new products, and also I think little investment in trying to understand what might be products that people actually need that might kind of, you know, do both things, be a success in the private sector and make you lots of money, and, you know, change poverty. Those to me are like the wins, right? So that, I think we're missing something, right? There's just not a lot of innovation, sadly.
Do you think there are sort of structural barriers there? Is it something about the regulatory structure or the competitive structure, or is it technology limitation? Or
I don't think it's any of those, actually. I think there was a bit in the first category of kind of infrastructure piece, in my sense. You know, I can only use mobile money if I can, you know, I can only build stuff over the rails of mobile money if they're truly rails. So you need APIs of some sort, right? Otherwise, to go negotiate with the telco is like, you know, gonna take you a while. They had a pretty poor API, but they relaunched, I think, a much better one, let me say. So I feel like that's now there. You know, I understand without an API, this is hard, but that's now there. I don't know what it is. I actually don't have a good prior, Elias. Maybe people are just too risk averse and don't want to take risk. And, you know, there's not a lot of access to funding for local entrepreneurs, and it's all in international entrepreneurs, and they're doing other things because they don't understand the local context, or they're just replicating others in other countries. I don't know. But
there's a nice suggestion in the chat here about whether there's part of it is just the difficulty of educating users about other types of products to gain adoption, sort of the marketing side of it.
Absolutely. I think not just the marketing side, but the incentives for marketing. I would agree with that. I mean, M-SHWARI is very simple to use. It's shocking how simple it is to use, Elias, because it's on a dumb phone. It's not a smartphone, right? And you know what's really funny about M-PESA, I will say this. When they launched the first smartphone app, the smartphone app was harder to use than the non-smartphone thing. So even if on a smartphone, you would use the hashtag for the USSD app and not the app, because the app was just like not functioning. I was like, okay, you can build that, you can't build apps, right? Like, so I do think there is ease of products, but people have figured that out with M-PESA and M-SHWARI. I don't know why we can't with others. So I agree with that. The other thing I will say is I was shocked with M-PESA, right? The take up is astronomically fast. It is hard to find anything that has been adopted at the speed that this has been adopted, right? Universal adoption of an app in quotes by everybody within 8 years, it's unheard of in Appland, right? Unheard of. I am shocked because I thought that would be the big constraint. I'm like, how are people going to type in numbers and send money and use menus? And it turns out, like, you know, we made primary education free. There's kids who can read. And so a lot of people who can't read go to their kid and go, I need to send Elias this much money. Can you do it? Do this. And the kid goes, sure, let me do for you, right? I mean, it's kind of fascinating because the things I thought were constraints are somehow like power. I thought power would be the biggest constraint. Instead, we have a bunch of entrepreneurs who buy a little generator and you go to the market and you drop your phone off with them and they charge it for you and then you pick it up, right? I feel like somehow creativity around has completely blossomed to solve problems when the product is going to solve a big problem for people. So I'm less worried about that. I think the products need to be targeted to people better. And I think that's maybe the biggest constraint, Elias, is people are not sort of immersing themselves in context. So I'll give you the M-PESA story, which I think everybody might know, but I'll say it. When they built it, the guy who built it thought it was going to be used to pay off microfinance loans. It turns out about 5% of Kenyans have microfinance, Elias. This wouldn't have gone very far. So they did a little pilot in Kenya. And the way we heard this was we mapped out a bunch of their agents when we studied this, and we asked when they started. And there's a bunch that started before the launch. And I went, where did these guys come from? They're lying. And I went to the mobile money company. They go, oh, those are our pilot agents. And I went, what pilot? So they piloted and realized, no, people don't have microfinance loans. It's not going to work. But people seem to want to send money to other people. And so they rebranded the whole thing, remarketed the whole thing. All the ads changed, everything changed, right? That piece, I think, is important and maybe not fully appreciated by people. Even the M-PESA story, most people don't know that it started off as something that would have failed completely. And then they did pilot and learn from the ground and then shift, right? I think that piece maybe is missing. I don't know.
There's two comments that in the chat that I think are kind of interesting. One is suggesting that in Pakistan, Jazz Cash has gotten a lot more types of products there. And so that seems like potentially an interesting comparison. I don't have a lot of knowledge of that. But
I think M-PESA does everything that Jazz Cash does, at least from what I'm seeing in the chat. It's just most people don't use it for that, right? So for example, you know, I'm Kenyan, which Elias knows, and my dad runs a little tiny firm in Nairobi. He did not use mobile money for the longest time because he has a bank account. Why does he need this, right? He started using it when you could pay your utilities on it. Sure, but how many people in Kenya have utilities to pay, right? It's, again, I think all those things that are mentioned there are, but they're used by small numbers of people, right? And so I'm thinking of innovation that really was like M-PESA, that can like both kind of create a product that can generate sustained profits for the private sector in some way, but also can like reach most people and fill needs that the bottom end of the income distribution has. Yeah.
That's great. And, I guess in your view, could you give a couple examples of the type of thing that might be that could do that?
I've been trying to convince them to build these and failing. So here's some free ideas for people if they want to build them. One is, in these environments, because risk is so salient, you get a lot of help from friends and family. And one of the things people get help for is medical bills and school bills. Those are the two big things, school fees and medical. But also your network sometimes does wonder, oh my God, if I send this money to Tavneet, is she really gonna pay her kids' school fees or pay for medicine or do something else? Right, and that limits how much my network is willing to help because they can't observe everything about me, right? And can't observe what I'm doing with it. And so, with payment systems, I don't need them to send it to me. They can send it directly to the clinic that I'm taking my kid and put it in a wallet for me, right? They can send it directly to my kid's school and say, I'm paying off Tavneet's kid's school. That seems like something that would be super useful for a lot of people, especially in this system where networks matter and social networks help a lot. I think the other is thinking about what people's financial money lives look like. Right, much as they're doing mobile money transfers, on average, this is one transfer every few months, 3 to 6 months, and it's about $10. This is not a huge amount of money. It adds up because it circulates, but let's be clear about what it is, right? So what's the rest of their life look like, right? 60% of farmers who farm and get harvest once a year. Elias, what would you like to be paid once a year? What do you think life would be like if you were paid lump sum once a year? Right? I think this, once you start to think about what that life looks like, you can think of a million things that would help financially at that point. And not just once a year in cash in your hand, right? That's what I mean. There's none of this, like, let me sit in someone else's shoes for a minute and think, what does that life look like and how would I function in that life? And I wouldn't do very well, I can tell you now, right? So I think that piece, is really important to understanding how we build products. It's about trying to put yourself in someone else's shoes that you haven't been in and think, what would life be like and what might help? But those are kind of the big areas I think that could really benefit.
Yeah. There was a comment a little earlier that goes back to something else we talked about this morning, which is sort of the regulatory environment here. And you had some interesting comments about how M-PESA sort of got set up and worked with the regulators there. So maybe you could share a little bit about that.
Yeah. So I will say this, the regulation around M-PESA, then there's a bunch of regulation if people are interested, and I'm happy to talk about what they are. But when they started thinking of building this, along with help, like I want to say some of the folks that funded our work helped in this process, and they're great. They're an organization called Financial Sector Deepening, and they've really worked very hard on the financial system in Kenya. So basically, I think what happened was they realized they were doing something new and novel, and it has the flavor of taking deposits. And they were targeting it towards poor people, not rich, right? The bill pay came later. All the kind of upper end income distribution things came later. And it would have the flavor of taking deposits. And when we think of someone taking your deposits, we regulate them like crazy, right? Commercial banks get regulated heavily because they take deposits. And so they knew it would have this flavor, even though they're not actually doing that. And if you want to hear the back end, I'm happy to tell you, but they're not doing that. But it has a flavor or a feel of that. And so they basically worked with the central bank, and the central bank helped with this, saying, okay, let's think about what the risks are in the system. What are the risks in the financial system? How do we deal with those? Can we regulate those in advance rather than having them launch something and then the central bank goes, no way, shut it down now, never again, no way, no how, right? So it's kind of this interesting model where you don't launch something, wait to freak out the regulator, and then the regulator overreacts and overregulates, right? There's an ex ante process where you go, we're going to do something that might freak you out because it looks like something, but it's not actually taking deposits because the money's all backed one for one, not at the telco, in fact, in the banking system, right? But, can we work with you to make sure we're accounting for risks and have a system in place that will allow this to flourish, right? And I think that worked really well. In a lot of countries, it's taken central bankers, and I think this was mentioned in the chat, and I couldn't agree more. It's taken central bankers a while to allow this. And in fact, when they first saw it, a lot of central bankers went, no way, no how. Looks crazy, looks insane, don't know, right? And they've slowly come around. But I think that is what regulators might do. And look, I want regulators to be risk averse in the financial system in Africa, right? I want them to be risk averse. So I do want them to be risk averse, but it's nice that you can also sort of think, oh, I'm going to do something that's going to freak out the regulator. Maybe I should talk to them beforehand and figure out what are the things they're worried about, and is there regulation that will help them not worry.
Has there been any sort of substantial evolutions of the regulatory structure since the launch?
Yeah.
And has it remained a fairly collaborative and are they willing to adjust for new technologies and ideas?
So the telcos are doing a ton of new technologies per se. They have a loan product, but that's fine. I don't know about the collaborative anymore. I will say regulation has evolved, right? They had transaction limits because they're worried about money laundering. Those transaction limits have been raised because they realize everything is recorded. If you really wanted to money launder, it wouldn't go on a recorded system, right? So that's one piece that's evolved. I think what was really nice in COVID, they decided that they would require the telco to remove transaction costs on cash, right? Early on in COVID, remember, we didn't really know if it was transmitted through touch or through aerosols, right? It's hard to think that far back, but it was the case early on in COVID. And so they kind of regulated down the transaction costs, basically saying, we'd rather people didn't trade cash because you might catch COVID over cash or something. Let's do things digitally. It might avoid you going places as much, stuff like that. So I think the regulators have been really excellent on these sorts of things, realizing quickly that sometimes a bit of regulation might really help. And what's funny is probably that made everything more digital faster, right? So it's better for the telco as well in some grand sense because people will use it more. But I think they've done that pretty well. They're starting to think about regulating the digital credit market because, you want to think about really terms and conditions and some sort of consumer protection side when it's credit, when they're borrowing. I don't worry so much about savings as long as where you're saving is reliable, right? So yeah, I think there's been evolution. I think at least in Kenya, the regulator is phenomenal. Like, he's superbly impressive. And so I think it's an environment where, I wanted things to take off because it feels like it should.
Do you, I guess last question, and then I'll sort of more open it up, although I've been trying to pull things from the chat as we go.
Yeah.
Do you think that there are, Kenya and other countries now have this sort of different financial infrastructure that's developed from places that developed their financial systems earlier, like the US and Europe. Do you think there are any advantages that gives them in terms of path forward, even for things like, bill payers, things that might, businesses or that sort of parts of the market?
Yeah, I think certainly maybe a little, at least in digitizing transactions a little. I will say, poor people just do a lot less transactions and a lot lower frequency. So at some level, the development problem is still there. If I get people out of poverty, that's going to do just as much as trying to digitize existing things, right? So I think there's a bit of a trade-off where we can go down this road of being super techie, which is great, but I just don't want us to lose sight of kind of the core mission, which is to get people out of poverty in some sense. That's why, the mobile money story is kind of a nice story in that it sort of did both, right? And so I think there's a huge opportunity to do both because there's digital accounts everywhere. Truly, I think the opportunity is huge. Can we actually do it? I don't know. Yeah, but I think there is a big difference. I mean, even with cell phones, right? There's, they never built 2G towers a bunch of places. They built 4G straight up in some places, right? So there is a bit of this. I don't have to go through the process of learning how to make things better, and I just get better things. But I'm a big believer in not just copying, but tailoring to the environment. And that's where I think, yeah, we can copy and be at the head of the game, but if we're not doing that tailoring piece, it's not going to get us that advantage of copying, because every technology needs a bit of tailoring to the local context in some way, in some shape.
Great. So we have just about 5 minutes left, I think. Everyone, please feel free to add questions in the chat. I'll jump back up to our first question, which as I predicted, we would get a question in the sort of crypto type space. And so, I'm happy to have you share your thoughts generally on that and whether that's going to be important. The specific question that was asked in the chat is thoughts on GovCoin or central bank digital currency. But I think, more broadly, would love to hear your thoughts on the importance or non-importance of crypto going forward.
Yeah, thanks, Elias. I think, again, just to reiterate my mission is not to have 1% of the population use something in Africa. I want 99% to use it for whatever works for them. I think on crypto, look, the problem they're going to have ultimately is cash is still the most important piece of transactions for most people. Sure, not at the top end of the income distribution, but for most people, think of before M-PESA, even though it's been 14 years, cash was everything. A small piece has gone on M-PESA. Remember, I told you for most people, they're just doing these remittances pieces. Cash is still 90%. I'm not going to go from 90% to 5 in a few years, right? So with crypto, look, you will need to convert to cash back and forth in some way, especially in poor environments where cash is needed all the time, where, the resilience pieces, think of those, Elias. I might have to cash out my crypto because something bad happened. And I need an on and off ramp from crypto into cash, and they don't have that. There's no credit cards, there's no banking system. Remember, we're still sitting outside the banking system here. It's not that people have credit cards. So without the on-off ramp, it's just not gonna be a big piece of solutions to anything in my books. Yeah, for the really rich, but again, I put my agenda on the table early on. Yeah, fine, that's okay. But if it really wants to change how people think about finance and their financial lives, you can't do it without the on-off ramps. The on-off ramps are not the banking system like they are here. You got to work with telcos, or you got to build that infrastructure that the telcos have spent 15 years building. Good luck. It's tough, and they can tell you how tough.
Yeah, and I loved that point that you made of just M-PESA's success was really about the on and off ramps and really solving that in a very good way.
Yeah, and Elias, just to add to that, the places where everybody asks me, why did it fail here? And I'm like, it's all the infrastructure. They didn't build a mass infrastructure for use, right? Imagine you live 200 miles away and I send you money and there's no agent around. I may as well not have sent you anything, right? So I think that is the success, or one core piece of the success. And it's what crypto will need.
Great. Well, thank you so much. Any closing thoughts you'd like to leave us with?
No, I think, this is a really interesting space in that, there's a lot of context-specific innovation that's kind of fun to watch and see. I wish there was more, as you've heard me say. But, even mobile money was kind of an interesting innovation. I'm hoping there's more to come. So whoever's watching who wants to work in this place, please go experiment. I think there's plenty of room to experiment.
Yeah, I think for those of us who work in tech, definitely a great call to arms. Lots of exciting opportunities, I think, to try and figure out how do we really make things that make a huge difference in people's lives. And so really interesting to get to hear your perspective on all of this.
Yeah, I'll leave with one thought, Elias. There's no trade-off in those two things. A lot of people think there's a trade-off between impact and profits in some way. That might be true in the developed world. I don't work there, couldn't tell you. But I think in this context, it's not there. There's no trade-off, right? And that's what makes it even more exciting for someone like me to kind of push all of you guys to have a call to arms, right? Because we'd love to see it happen.
Excellent. Well, thank you so much. Really appreciated getting to talk with you.
You too, Elias. Thanks. And thanks to everyone who joined us.
Absolutely. Thank you all.